Hello and welcome. This is a special edition where we are focusing on the huge influx of foreign capital that is really coming in our financial services sector. Today's large transaction, which the crack team right here of NDTV Profit is going to decipher and decode, is the Shriram Finance deal. And not just that, remember that Yes Bank, RBL Bank, they have also got foreign influx of funds, and a battery of experts are going to join us right here on NDTV Profit to give us a sense on what it means for the financial services space, the growth of banking and NBFC spaces in the country, and what it means for the overall sector dynamic in the next 3 to 5 years. So let's begin with the deal of the day today. It's Hello Tokyo, and it's the Shriram Finance deal with 20% stake sale to the Japanese strategic, which is really coming in with a fund infusion of close to 40,000 crore rupees. My colleague Somit has all the deal contours. Somit, tell us.
Well, firstly, they're going to put in close to 39,681 crore rupees for a 20% stake. That is what MUFG will infuse into Shriram Finance.
Yes.
Now, they will subscribe to close to 47.1 crore shares for 841 rupees, which is at a discount of nearly 7 to 8% compared to the current market price of close to 902 rupees. Now, Shriram Finance current promoters, their stake will come down from 25% to 20%. They're not selling any stake, it's just a dilution that is happening. And existing public shareholders stake dilution will come down, stake dilution will happen, and that will come down to 60% from 74.6. Now, post this fund infusion, the book value, that increases to 425.2 rupees per share as against 321 rupees per share. That was their pre-fund infusion, and this is a growth of clear 32%, and that is the major reason why we saw this move in the share price of Shriram Finance. Now, at a price of 841, this translates to a book price to book value of just 2.1 times. Now, if you look at the valuation table, this table clearly gives you at what valuation was Shriram Finance trading before this deal was announced, and at what valuation its peers are trading, like Chola Finance and M&M Finance. Chola Finance trades at a valuation of 4 times, Shriram Finance was trading at a valuation of 2.3 times, and M&M Finance at a valuation of 2 times. So this is the major reason why the share price of Shriram Finance bumped up. Now, their cheap valuations compared to Chola Finance and book value increases by 32%. These are the two major reasons, and if you multiply the post-infusion book value to the earlier valuation of 2.3 times, then that gives you the intrinsic value of Shriram Finance, which stands at close to 978.4 rupees, which still suggests an upside of at least 78 rupees from the current price of 900 rupees per share when it comes to Shriram Finance. And this is the major reason also why Chola Finance is down in trade. Now, it is trading at a valuation of 4 times, and a foreign player is coming into Shriram Finance at a valuation of just 2.1 times. And this expensive valuation was the major reason why we saw a sharp fall coming in for Chola Finance in trade today.
That's right. That's a very important aspect that you mentioned, Somit. And let's take it straight to Gurmeet Chanda, the managing partner and CIO of Complete Circle. Gurmeet, what does this deal really mean for Shriram Finance?
No, it's extremely positive. Somebody, a quality investor, strategic investor coming, infusing this kind of FDI, almost 40,000 crores is a big positive. And I think you should look at beyond. I don't think so liquidity was ever an issue with Shriram. In fact, last quarter they had to use surplus liquidity to improve, the return ratios and earnings. I think it also signals the broader confidence, the group has, and more probably businesses which will get incubated. I think this partnership looks more long-term to the kind of capital being, committed. Something what probably Geo Finance has been doing, incubating different verticals in finance. Operationally, I think will lead to drop in cost of funds. It's a very, very big credit positive. The bank will not be surprised if they get a credit upgrade. Something what, let's say, a Poonawalla got post they acquired Magnum, or Geo started with a AAA rating. And that obviously has significant impact on earnings. And, your colleague made this point that it doesn't lead to too much dilution, both in terms of equity or ROE.
So, Gurmeet, my only one quick question to you. For how many years Shriram Finance will not have to come to the market for more funding? For how long are they sustained now with this funding?
I think should be sorted at least for the medium term.
Right.
I don't see that coming in, and I think it's positive for other large NBFCs also.
Right.
I don't agree on that valuation gap. I think this will have a very positive impact on overall tier 1 NBFCs.
Right, Gurmeet.
I think market will get more consolidated.
All right, market will get more consolidated, but we have a battery of experts. Shanti Ekambram, the former Deputy Managing Director of Kotak Mahindra Bank, joining us. Sonia Das Gupta, who's the MD and CEO of Investment Banking JM Financial. KK Mistry, former VC and CEO of HDFC Limited. Thank you so much, ladies and gentlemen, for joining in. Now, first question to you, KK Mistry, what does this foreign influx of funds really mean for our financial services sector in India?
I think it means two things. One, it means it brings in confidence. It means that foreigners have confidence in investing in the Indian markets because they are confident about the regulatory environment, the growth opportunities that exist in India. So it's a positive signal for India, and it's of course a positive signal for the group as such, for the Shriram Group.
All right, a question for Sonia, ma'am. Sharad here. Largely, we are seeing good flows coming in from the global participants in this segment. Now, for 2026, does this outlook become much more better because the confidence is not only coming from Japan, it's also coming from Middle East. How will you be looking at this space now?
I think 2025 has really been the year of fabulous partnerships and deals in the financial services sector in India, especially on the lending side. If you see now, all the three large Japanese banks have struck in deals over here: SMFG, MUFG, and Mizuho, and of course from the Middle East. So I think a large part of the deals have already got done. And I think one of the key reasons for this clearly is the huge growth penetration, the very low credit to GDP ratio, and the fabulous demographics that is at play in India. Added to that is the full credit to the regulators who have made sure that the balance sheets are so clean, and the regulators to make sure that the disclosures are so clear that there is a lot of transparency for foreigners to infuse money. There's a lot of confidence in the balance sheets and the numbers of the Indian large entities. And I think given the sheer check sizes, I think it augurs very well for the long-term growth of these Indian franchises. And very important thing is that most of these deals have been primary infusions into those franchises, which means that they are really here for the long haul to make sure that these entities grow from here on.
Right, Sonia, very well pointed out, and you have been an expert in this space. Shanti Ekambram, you've run a bank for so long. What does this mean? Of course, it's the raw material, the critical nerve center of the financial services space. How do you see this particular development with Yes Bank, RBL Bank, now Shriram Finance attracting huge amount of capital?
So I actually see it as a vote of confidence in the Indian growth story. This is actually what I call growth capital because it is a primary infusion into the country. Look at what it does to Shriram. A, it provides long-term growth capital for them to grow aggressively as well as diversify into other areas. Second, they've been seeking a AAA credit for a long time. This, in my view, should give them that, which will again reduce the cost of funds and thus earn it. So I think you look at the other investments that have come in, and incidentally, we've had three large Japanese banks invest into India, and Japanese are really long-term capital. If India 2030, $7 trillion has to happen, and Viksit Bharat has to happen, financial services is at the center of it. And as you rightly said, financial services, raw material is money, and capital is essential for growth. So I look at it as a confidence in India, confidence in the financial sector, which is at the core of any economy, the willingness to invest for the long term, and speaks good. So I actually think it is positive.
Vote of confidence coming in from Shanti Ekambram as well. KK Mistry, it is a huge amount of the intent from the country as well as the regulators' mindset that has really made this happen in this particular year. How do you see this mindset really developing for the financial services sector's growth in the country?
Well, I have absolutely no doubt in my mind that the Indian economy is on a very strong footing. And for the Indian economy to continue growing at the pace at which I think it will grow, finance is the most important ingredient, the most important raw material. So the financial sector by itself is a sector which is extremely unattractive to foreign investors, primarily because of the fact that the penetration level of any kind of financial services product in India is extremely low by global standards. And therefore, the growth opportunities which are there for the financial sector are huge. And that is probably the reason why foreign banks, and particularly Japanese banks, who are really long-term investors, I think as Shanti said, are looking at India so favorably.
Welcome in Ashwin Parekh, the Managing Director of Ashwin Parekh Advisory Services, onto this conversation. Sir, MUFG right now just made a statement that they are not investing into bank and they have chosen an NBFC because they're saying that the ownership rules are quite unattractive in India. Do you agree with this statement that MUFG has made, and do you think is that one of the reasons why not many investors are putting in a large amount of funds like what MUFG has done in Shriram Finance?
Well, yes, I mean, it could be because you still have voting right caps, in the banking sector. So that could be one of the major sort of, factors that can be playing out over here. But I suppose at a larger issue, what seems to be happening, I suppose, is that from the point of view of credit flow to the economy, there's a clear recognition on the part of the regulator. If you look at the last 3 or 4 monetary policies, you will realize, that the governors have really said that there is disintermediation in the banking system, which means the deposits are not flowing to the banking systems as much or to the extent they were in the earlier years. More of household savings is flowing to the capital markets now, in which case, in order to strengthen the balance sheets of banking companies and also to make sure that the fund availability improves with a lower amount of deposit mobilization, there's a need really to bring in large amount of capital sums from investors, such as the ones that we are seeing basically both in the banking sector as well as in the NBFC sector. NBFC, you will see perhaps more interest. And then initially it may start off with deposit taking NBFCs, if I have to guess. And then gradually it will penetrate more into the strategic investments into even the other NBFCs. So there the regulatory oversight is a little it's as bad, but a little less compared to banking, perhaps.
Yes.
But voting rights could be one of the major deterrent, I thought.
Right. Voting right is a very big deterrent, as rightly pointed out, but NBFCs, financial services, have lesser of those regulatory restrictions. Keki Mistry, what more needs to be done for more fund infusion? And also, do you see any challenge in us really banking on the foreign capital a lot more?
I don't see any challenge at all, to be honest, because I think the Indian financial system is extremely strong, very well regulated, and the domestic investment itself is so large. I would not worry about foreign ownership or foreigners coming and putting in more capital into India. In fact, I'll give you one example. You have the MSCI index. Now, the MSCI index is based on the amount of money that foreigners can invest into a company. Now, when you look at banks, the foreign ownership is capped at 74%. If we were to theoretically increase that from 74% to 100%, you can get a lot of foreign money flowing into India without any impact whatsoever on control, on shareholding or anything of that sort, because RBI controls shareholding very, very tightly, very, very closely from the in terms of ownership in banks. So I think these small little changes can bring about a huge amount of foreign capital into India, and passive capital, not active capital, not necessarily active capital.
Shanti, I have a question as well. We are speaking about a lot of private entities and the way the foreign interest has come in. But since we are talking about the entire BFSI space, there is a capping in the PSU banking space as well, and buzz in the street is this might be going up also. So if that scenario happens, what will be the interest gauge for the foreign investors for the PSU banking segment?
I think if you look at what has happened in the secondary market, And you just have to look at State Bank of India over the last 18 months in terms of just the sheer stock. You have seen what kind of interest has come in and how our foreign investors have, taken stake right up to the permitted amount. So I think there are two things. One, the increase in holding is not just for the purpose of divestment. It could also be for the purpose of growth capital, as the government rightly believes that India needs growth capital and has tremendous opportunities. I think there could be interesting deals. One. Second, it will give the much needed growth capital. In my view, the government does not necessarily need only 51% to control any company. All of us who have done M&A know that, you have golden share concepts and many others that can help you retain some amount of control. So in my view, more capital flowing to the sector, more credit flowing into the system. If India has to build, it has to build its infrastructure, airports, ports, companies, and retail credit penetration as well. I see capital coming in.
Okay. Ms. Ekambram, thanks for that view. Mr. Mistry, Sonia, as well as Mr. Parekh, Neeraj Shah joining in as well in this conversation. And just the first question from my end to Mr. Mistry, which is that since we've seen now enough examples in the last 18 months, okay, I think, Nisha, maybe you take it over because I think there is an audio glitch.
Thank you, Neeraj, and good to have you also on the screens. Shanti made some very interesting points. And Sonia, you have been working on several transactions that really take place. Give us a sense on how easy or difficult these transactions would be where the regulatory overhang and restrictions are quite a bit.
See, in any transaction, as long as the regulatory framework is clear ab initio, right, then you always provide for that. I.e., if ab initio we know that there are voting right restrictions, then people will respect that and work on agreements taking that into account. If they know that after acquiring a particular stake, you have to trigger an open offer and make another open offer for 26%, then they provide for that. I think where there is always a hesitation from foreigners to come in, if there is no regulatory clarity, and if there is something which is it falls in a gray area where they will not know how long a permission takes. But of late, every regulator has been very consultative on how to make sure we make India a great place to invest, trying to understand what are the hindrances in the processes, in the approval times, and how we can make it easier for us to get, best of the foreign capital technology. So we have found it very, comforting and a matter of great pride when we take foreigners to meet all the regulators to see whatever has been the, things which are coming in the way of closing deals faster get sorted very soon. I think regulatory clarity is the most important. But as has already been said by one of the panelists, wherever people don't get equivalent voting rights to their beneficial rights, that will always be a concern for foreigners to invest in those sectors.
Well, but I think this dispensation has shown that there is a lot of tailwind towards both regulation as well as growth. And therefore, maybe that explains this kind of interest, right, from global investors into the Indian landscape. I mean, I just wonder what will happen to Shriram Finance over the course of the next 1 year as the valuations kind of re-rate themselves. And the same question to Mr. Ashwin Parekh as well as Ms. Ekambram. And Ms. Ekambram, to you first. Do you reckon that because of, and this is Neeraj here, by the way, good afternoon. Do you reckon that because of the fact that the RBI as well as the government are so pro-growth, is one reason why there is so much of interest, that the regulation seems to be in favor? The RBI seems to be an RBI or a central bank which is kind of pro such deals as well, if you will, not averse to it, and that the valuation re-rating for the NBFC sector might happen over the course of the next 24 months. Is that a distinct possibility?
So if you look at the three large deals, a lot of Japanese money, I said it's long-term patient capital waiting by the sidelines. And there is lots more that is waiting. I think if you look at some of the regulations that the RBI has, brought out in the last 1 year, has made it easier for banks and NBFCs, and they are willing to work with the banks and NBFCs towards finally looking at credit growth and more money into the economy. The government has brought in many fiscal measures and are more than willing again and open to bring in capital. I think India is a capital-starved country, and it's not just for the financial sector overall to build India. And thus, I think this positive outlook. Second, if you look at India's growth, which country in the world is growing at these kind of growth percentage of 7% plus? We had 2 quarters at 8% plus. So there is a growth in the economy. There is changing demographic. There is hunger for consumption, and there is also, capital expenditure that need to be. So second is the growth opportunity, and this growth opportunity is not 1 or 2 years, but possibly sustained over the medium term. In my mind, these two key factors are important when you look at bringing in investments, particularly into the financial services sector. And I think Indian financial sector has not seen consolidation for a long time, perhaps while many other sectors have. So maybe this is just the beginning, but I think capital infusion is for growth and a vote of confidence.
Yeah, most certainly. But and very well put. Thank you so much for that, Ms. Ekambram. But Ashwin Parekh, I would love for you to come in here as well, because we've seen deals happening across the market cap landscape, right? It's happened with Ugro Capital as well, which is a very small firm, and with some of the larger ones. The moot question is, does this enhance the I look at everything from a markets prism. Does this enhance the valuations that the sector can get? Because it was really reeling until beginning of 2025. So do you think that can happen? And would that essentially entail more interest as well over the course of the next 12 months? Because we've seen multiple large deals. Can more happen?
No, certainly. Basically valuation is a function, of both potential and actual performance, basically. Now, we all know that all the companies in which, let's say, large investments have flown in have actually showed over a period of time, their ability really to really grow their business, work their business. They may have come across periodic sort of, ups and downs, but normally these have been very well established, whether it is Shriram, whether it is RBL, Federal Bank as well. So these are institutions which have actually been there for a longer period, and they have the potential is huge. With more capital flowing in, I'm sure the valuations and therefore the market multiples will also grow. There is only one observation that I would quickly like to make. You see, when the RBI looks at the fit and proper, of those who are admitted as shareholders, strategic shareholders particularly, then, you will find that there is a certain pattern. Patient capital, as rightly pointed out by one of the speakers earlier. Two is the jurisdictions from where that capital is coming in. I suppose if you study the transactions which have happened in the last 4 or 5 years, you will find that there is a certain amount of pattern. I think we need to, and we are, actually avoiding some of the jurisdictions from where capital can perhaps flow, but then we don't want to really get into that sort of, so that's one of the things. Earlier, there was just quick mention about PSU banks and where do we find PSU banks. I suppose PSU banks have performed very well in the last 3 years. After the consolidation agenda, that the government ran and the regulator ran with them, they performed very well. They are also good candidates. There is only one cultural issue basically, and what could happen is that if a large investor would get into a bank such as, let's say, an IDBI bank or any other PSU bank, then of course, putting in the governance framework, putting in a certain order of sort of management style, working, all that would take a little while. But I'm certainly saying that they are good candidates for capital as well over a period of time.
Many points made there, but Sonia Dasgupta, you have been also leading the charge on many of the transactions in the financial services space. My two questions to you: with this change in mindset, with foreign inflows coming in, do you think that now the time is ripe for the banking license to be opened for the corporate houses as well, which has been a point of contention? And the second important point, do you think that more private equity players will not shy away from taking minority stake because they have an exit mechanism by way of strategics coming in from foreign lands?
No, absolutely. I think we are finding in any transaction that we run on the M&A side, for with control, without control, that the private equity universe is a fierce set, competing head-on with all the strategic interests and very often outbidding them in acquiring stakes. In fact, if you see, case in point is Blackstone. After having acquired Aadhaar and post the IPO, they have actually continued it by putting it in a continuation fund of theirs or transferring it into another fund, and even made an open offer. So they are willing to make an open offer because the rules require them, whereas they are actually transferring it, the existing stake in Aadhaar, to another fund of theirs, because they are very keen to look at long-term investment. So the private equity universe is also having a long-term orientation to good franchises in the country. And clearly, if strategics come in, that always remains as a great option over and above the depth that the Indian capital markets has allowed them to make exit through blocks. So it's a win-win, and clearly this will spur a lot more confidence of the private equity universe getting into more transactions with control and for growth. On your point on the banking license, clearly, like Shanti was saying, India is a capital-starved country. We need banks to really, lend more. We are at a crossroad where we really need to move up the tables and on the GDP ranking, and requires a lot of investments, which means the banks have to take a long-term view and really invest. We are already seeing credit deposit ratio reaching 80%.
Sure.
So clearly, we need to be more creative about who are the entities who are allowed to invest long-term money.
Yes.
And yes, if we are allowing foreign strategics, then it's fair question or fair ask of the Indian industrial houses to also be given a platform and opportunity to be able to build the country shoulder to shoulder with the foreign strategics. I think it's a fair time that we look at this and allow some of the deep-pocketed Indian industrial houses, with whatever checks and balances are needed, to play this role to build the country through the banking system.
I think this point had to be made, and this discussion was not complete without that, because a lot of promoter group entities are also questioning if foreign entities are allowed, why not us? So yes, a great point made there. And on the confidence coming in from the private equity side, want to lay out IDFC First Bank also has Warburg Pincus and Adia. Yes Bank got an exit, the private equity players got an exit through a strategic sale, so that was a success for both Carlyle as well as Advent. RBL Bank has also sold to Emirates NBD, and there again the private equity made money. Federal Bank has got Blackstone as an investor. So some of those sitting ducks could really look at the strategic sale, since the foreign capital is really interested and the strategics are really lining up, especially we have seen from Japan and Middle East. All right, to bring this particular discussion to a close, let me thank Shanti Ekambram, Keki Mistry and Ashwin Parekh, Sonia Dasgupta for joining in with all your insights. Thank you so much for joining us right here on NDTV Profit, and my colleague Neeraj Shah, Soumit, Sharad in the studio with me, Nisha, really signing off on this large discussion on a large transaction in the NBFC space. Thank you so much.